We see a rebound in stocks on Monday, up big on Friday, and then a reversal on Monday. However, our weekly vertical crossover has not been withdrawn on either the S&P 500 or the Nasdaq 100. We do see both of them down strong. We see bonds down just a little bit and gold up some. Let's jump first into the S&P 500 and see what we see. So far, the first day of the 5-day candle, we see the derivative oscillator gaining momentum. It had turned green the prior week, had a green up candle actually for the 3 prior weeks. We had that weekly vertical crossover occur on Friday at the close of the prior candle. That was a candle ending Friday the 25th of January. How do we see the week starting off? Down 0.75%. We have a red open box candle. That means caution at this point. Depends on how the rest of the week, of course, goes. But we have the 2-day and the weekly in confirmed up moves. Now, we did not have a jumping in point. We'll get a little closer to that here in just a minute. What do we see going on as far as price movement goes on the 2-day chart? Well, the latest 2-day candle ended on Friday, so this 2-day candle that we're into right now is only half drawn, but it is a red close box, a very small candle. Really, what this shows is a sideways slide where the market peaked out back on Friday the 18th and then slid sideways, tending up throughout the week, but never hit the high as we talked about that it did on the prior 2-day candle ending the prior Friday the 18th versus Friday the 25th of January. Derivative oscillator losing momentum. Price percent oscillator still up, but it's lost some of its prior momentum. We'll see how this candle ends up finishing off. But again, we do have a weekly vertical crossover going up in effect, just happened. Now, as we get closer and we look at the 4-hour chart, of course, you can see that there was no jumping in point. As we told you on Friday, be looking for a jumping in point. There wasn't one. Market was down strong in the afternoon, recovered a little bit as far as the Heikin Ashi average pace goes in the afternoon, but price percent oscillator heading down, derivative oscillator still negative on that 4-hour chart. No jumping in point. What does that mean to you? That means that you should continue to keep the powder dry, watch and see if and when there is a 4-hour crossover going up. That'll be your trigger chart to jump into a practice trade. Again, remember, we follow trends. And if the trend weakens or is not there at a time we would like it to be, we're not fools, my friends. We don't just jump in because we feel like it and we hope. We do not do that at all. We told you to watch the charts at the opening during idiot hour from 9:30 to 10:30. And of course, you had 2 strong red down candles. You had no jumping in point at that time. So we shall wait and see how things recover, and we'll be keeping an eye particularly on that 4-hour chart. Now we go from the Nasdaq, we go from the S&P 500 to the Nasdaq 100. Looks very similar to the red open box candle, meaning caution. Derivative oscillator still gaining upward momentum. Price percent oscillators heading up. Nasdaq was down considerably for the day, 1.24%. But again, the weekly vertical crossover still in effect. It didn't pull back with that down day. We look at the 2-day chart and we again see that sideways slide with a red down candle forming. Not a huge one. Again, all contained within the prior up move all the way back on that big 2-day candle on Friday, the 18th of January. Derivative oscillator losing upward momentum. Price percent oscillator still up, but not at the same angle it had been. We'll see how this 2-day candle finishes forming on Tuesday when it closes itself out. Now let's look at that 4-hour chart again, down strong in the morning, and again another down, more down movement in the afternoon. Price percent oscillator heading down, derivative oscillator gaining downward momentum. So we'll wait and see. And again, if this 4-hour chart rotates over soon before the weekly or particularly the 2-day rotates over going down, then it'll give us an opportunity to jump in. If it doesn't materialize, my friends, it doesn't materialize. No harm, no foul. We're ready to jump in and follow the trends when they work. You cannot control the market. I cannot control the market. That's why we don't, quote, forecast. We follow established trends when the rules are obeyed. Why do we obey the rules? Because the rules work almost all the time. And the rules didn't let us get in on this today. Perhaps the rules will let us get in later in the week. That's what it's all about. Follow the rules, practice trade. That's what we're here to help you do. We're not a stock calling service. We're an education firm. Let's move on to 20-year bonds. What do we see going on there? Well, the weekly chart, we again see a sideways slide sort of going into the third week of that. And we look, we're still in a confirmed up move on the weekly chart. Derivative oscillator losing momentum. Price percent oscillator also losing some momentum, really a sideways slide so far. Not a lot going on there positive in bonds. We look at the 2-day chart and we see again derivative oscillator losing some downward momentum, but that price percent oscillator still heading down. We have a red open box candle forming right now. I mean, are things going to get strong enough for the 2-day chart to cross over? Could happen later in the week, not happening right now. We've got the weekly in a confirmed up move, 2-day in a confirmed down move. That means, of course, we have no trade. We look at the 4-hour chart, and of course, it's really just showing us that sideways slide. Price percent oscillator is positive, but looks like it's heading toward the red signal line, and the derivative oscillators losing upward momentum. So continue to watch and see how bonds shake out. They might be waiting to see how stocks shake out. Typically, bonds are a safe haven for money that flows from the market when stocks aren't doing well. Stocks are doing good, money tends to flow into them. So we'll see how things shake out. Market is still trying to figure out which way to go. Now we go to gold. Lastly, we see gold up for the day 0.35%. Week starts off with a nice up candle in gold. A green up candle forming so far for the week. That looks pretty nice. Derivative oscillators continuing to lose upward momentum a little bit. Price percent oscillator, however, our main oscillator, headed up quite nicely, our main indicator. We go from the weekly to the 2-day chart. And again, first day of this latest 2-day candle pushing up quite nicely. We'll see if indeed we have a crossover going up. If we do, then of course that brings us into the prime territory to look for a trade in gold. If the 2-day candle closes out, when it actually finishes, it'll finish drawing at the end of the day on Tuesday. If that's a 2-day vertical crossover, then of course that will qualify us to look for some potential up trade in gold if it presents itself. During the week, derivative oscillator losing downward momentum. That price percent oscillator looks like it's trying to cross. We look at that 4-hour chart, and we got 2 days of decent up movement in gold trying to push through and regain that momentum, pushing through the weekly trend line. Derivative oscillator gaining lots of upward momentum. Price percent oscillator heading up. So let's see what we see as things develop. Thank you so much, my friends. We've got orders we are fulfilling for today and from the orders over the weekend. Thank you so much for purchasing the book. If you'd like to see more about it, you'd like to purchase the book, Charting Your Way to Wealth, that explains what we do here at the channel and is your basic primer for everything at Charting Wealth. You can find a link in the show notes. If you'd like to be a Patreon sponsor, you can even, depending on the level, get a book for free. And you can also get our Traders Journals. Again, thank you so much. God bless. All the best from the whole team here at Charting Wealth World Headquarters.